Hi there, this is the story of super microcomputer, ticker symbol SMCI. Right now, the market cap is about $24 billion and the price about $40 per share. It has declined from its peak $114. And now the most important question is whether this company is a great buy at the current price and if the price can rebound back to over $100 per share. And the answer to that question, you will find it in this box. During this video, I'll open the box and you'll find my answer. Now, to understand this answer, you have to look a little bit at their business to understand it and then predict their future, what they can do and what's next, right? If you look at the revenue over the last 3 years, amazing. 7 billion, 15 billion, 21 billion in the last 3 years. And that's why the price went up to over $114 because of the high growth they reported. And to your surprise, they also succeeded to make a profit. 600 million, 1 billion, 1 billion. So that's quite important. Now, they also reported recently the results for the first quarter of the fiscal year 2026. And the revenue was about 5 billion. Here is the thing. They reported a decline from 5.8 billion year over year. Same for their earnings. They reported 168 million, again a decline from 195 million. Also declined year over year. And that's why you saw that decline in the stock price, because it went up from $40, 40%, and then down again. But is this the last investment? Should you continue to invest or stop investing in this company? Because they also offered guidance for the fiscal year 2026 full year. And they expect 46 billion in revenue. Now, even if they reported a decline in the revenue for the first quarter, for the full year 2026, they expect an increase in revenue compared to 2025. Because in 2025, they had close to 22 billion. And 26, 46 billion. They expect 46 billion revenue. And this is quite great. I mean, yes, you may have a loss here. A small decrease in their earnings. But then, over the next quarters, you might see higher profits than the previous year. Revenue for sure, as they expected 46 billion. This is their guidance. Guidance from the company, not the analyst estimates. And if they can deliver, let's say, 1.5 billion earnings, then yes, the stock price can rebound from this level, go higher in the future. Now, how much can this company grow? You also have to ask that question. But before that, you have to understand, if you are a new investor and you don't know anything about this company, you have to know that they operate in the AI and data center infrastructure. They sell, better said, the hardware. Now, if you also look at their cash and debt, they have 4.2 billion in cash and debt 4.8 billion. So here there is no problem. They don't have a lot of debt. As long as they continue to grow, improve their margins, report a profit, this investment will do well in the future. And here is the thing. The analysts expect for 2028 the revenue to be about 50 billion. So from 36 billion to 50 billion is quite a lot. Now, here is the trick. How much money they're able to make on this revenue. Their final profits. Will they be able to deliver 2.5 billion earnings? Ask yourself. And continue to grow after 2028? If the answer is yes to that question, then the market cap from this level can double by 2028. So 26, 27, 28, 3 years. you can have a double from this investment. This is the upside. If they improve their margins, report 2.5 billion, deliver 50 billion by 2028, at the end of 2028, you can have a 2x on your investment from this company. This is the upside. Now, let's also look at but before that, look at the downside. They also have an advantage. They have strong partnerships with NVIDIA, Intel, AMD, and Micron. And this position SMCI as a leading company in this AI and data center infrastructure. You have to understand this because they are from the US. Now, let's look at the downside. The downside is the competition first. Competition from Dell, HPE, Cisco, Lenovo. And if they compete with those players, they already compete, you might have the risk of low margins. The margins be less than 10%, less than 5%. And if they report low margins, the earnings by 2026 might not be 2.5 billion, but 2 billion or 1.5 billion. And if that happens, your upside will no longer be 2x, but let's say a increase of 50% in the stock price of this company and market cap. You also have to be aware of this. Your returns may be lower than expected due to competition, and competition drives low margins. Now, there is another risk you have to be aware, and that is the AI boom. If by any chance the investments over the next 3 years will slow down, they build the data centers, and then there is a slowdown in those investments because, as you know, they build the data centers. The lifespan is about 3 to 5 years for those hardware. And that will be cyclical. You have to understand. You will have moments high revenue and then low revenue. And again. Now, by any chance you catch this company at a low range when the demand is low, they might not be able to deliver 50 billion in revenue by 2028. And if they deliver less, due to boom here, you bought here when the demand was quite high, and then over the next 3 years the demand will be lower, the revenue can be flat or report an increase only to 36 billion to be flat over the next 3 years. And if that happens, your investment will be quite bad. You might break even or another decline from this level, let's say 20%. So you have to be very careful here how you assess this company. And to open the box and show my answer whether this company is a great investment or not, my answer is no. It's not a great investment for me. A good investment, maybe, only if you believe this AI boom will continue and will deliver you a nice return about 10% a year. But great investment is not. SMCI is not a great investment right now. You have those three scenarios: 2x, 50%, and a decline of 20%. And now, when I compare these returns with my portfolio, what investments I have in my portfolio, go to my profile, press join, and choose Titan Investor, and there you have access to my portfolio. I have investments that deliver more than 2x. And the downside is quite low. The risk is low. And by the way, my performance over the last 4 years has been 30% a year, compound annual growth rate. Plus, you also get access to an investing course, how to analyze companies like SMCI, other custom-made videos, in-depth analysis at the request, and bonus access to the previous levels, Spartan and Gladiator. So, if you want better investment ideas than SMCI, increase your returns, make more money, join my membership. And that's it for this video.